Okay, Peter, we are live. Okay, welcome everybody to a Wall Street Reporter's Discovery Day, a live stream. For today, December 11th, 2020, we have an exciting debut presentation, or actually it's an interview, a live chat with Fabled Silver and Gold CEO is Peter Hawley. Peter, welcome.
Thank you very much, Jack. Appreciate it.
So, Peter, I'm excited to have you on because we're getting, we're starting to get a lot of interest, or maybe it's a personal interest in the resource space, silver, gold. Personally, I believe that we're going to see $3,500 gold, $100 silver, in the next let's call it 18, 24 months. Again, it's an opinion. Everybody has opinions, but we're definitely starting to see some things happening, and so the idea is, we kind of have this bullish thesis on the precious metals, and historically, just speaking with some of the gurus we've had, the gold, silver gurus we've had on the program, everybody agrees that the real money, when these markets go into full bull mode, the real money is made in the junior exploration space.
Yeah, certainly have to agree with that. And there's a famous technical chart that you see as an explorer, takes off and then has success, that it's value driven for its shareholders. And then when it gets to the point of a major deposit, and now they have to go through the permitting process, usually you see the stock fall off into a lower curve while they're getting their permits and de-risking it, and et cetera, and then all of a sudden, wow, we got our permits, wow, we got our financing, and then here it goes again, upwards again. So yeah, I know exactly what you're talking about.
So yeah, the real money is in the exploration. It's buy the rumor, sell the news. It kind of applies, in exploration versus production. Although I think your history, you've put mines into production. We'll talk about that. So you have to start off with this, Peter. Our audience, they're used to right now. They're getting stocks that have been 10 baggers. Stocks that have we've had a bunch of winners up 1,300, 2,000% in the past year. A bunch of other stocks that are up 500%. So what they're looking for right now is the next 10 bagger or more, maybe even 100 bagger. So the question is, can Fabled Silver, does this have 10 bagger potential? What needs to happen for it to be there?
Well, I guess, and I'll kind of, my own personal criteria if I was going to invest in a company, the first thing would be the management. Does management have a track record? Does they know what they're doing, et cetera, et cetera, et cetera? And then on top of that, it would be location, political risk in the country or whatever. And then infrastructure, is it in the middle of the mountains with nothing around it, or is it close to, a developed infrastructure? And then, of course, ultimately, it's the property, and why is this property important, or why is it going to grow bigger? And those are kind of the three or four things that I would say to a shareholder that you should look out for. And I think we check every one of those boxes, Jack.
Okay, so so let's talk about your project in we got a little shaking in Mexico. What's the path for Fabled to get to, let's call it $1 a share? What needs to happen for value to be created in the, let's call it, intermediate term?
I think there's two things really. One is, of course, is awareness of the company, and we're a new company coming out, so not a lot of people are aware of us. Although in the mine industry, unfortunately, and you can tell by the gray on my face and my head, I've been around for 35 years plus, so I'm well known in that sector. But in the Santa Maria property, which is located just south of the town of Parral in Chihuahua State. Now, Parral historically has produced over 250 million ounces. So it's a dedicated silver company, camp, going back to the 1600s. And all the big guys are there. So location. You have the Mexican miners, Grouppe Mexico, IMSA, Peñoles. You have the Canadian miners, Endeavour Silver, Gold, First Majestic, to name a few. So you're in the right camp. I like to
And historically, 250 million ounces of silver came out of the ground there.
correct.
Okay, so I guess the question is it been played out?
No, and this is what's so interesting is that originally in my career a long time ago when I started off in my career in a place in northern Quebec called Val d'Or, Quebec, and Val d'Or is French for Valley of Gold, and it's produced to date in the vicinity of about 42 million ounces of gold. The thing about that camp, it has revived itself years after years after years, because what happens is everybody has a certain model and they do their exploration towards that model, and then they have success, and away go the mines progress and everything else. And as those mines are kind of wandering down and everything else, someone else says, oh, I got an idea, and they come in with another idea, and then the camp blooms again, and this happens over and over again when you have these prolific structures or that host this mineralization. And I believe what we have in Parral, and I have a theory of what we have, is applying a new geological theory, which is very sound, built on 35 years plus experience, that we're going to make a major discovery during the upcoming programs.
Okay, what's your okay, so let's talk about the potential first. What is, you have this property. Let's maybe give us a background of the property that you have, the project, and what is, what you see as the potential. Like, what got your attention for this? Because and then I want to talk about your background, because you've had a couple of hits, in the course of your career.
Yeah, I've been very lucky, Jack. Here's the thing. Everyone that's looking for a mine or whatever, the common jargon they use is grade is king. If you mine a ton of rock, your cost is the same. So the more you can put in that ton of rock, the more you're going to reap the rewards. And this property is probably one of the highest grade, upper level epithermal deposits that I've seen in my years of kicking around in Mexico, which is over 25 years. And usually when you find these things, you know what? The Spaniards have beat you to it, or the local Gambusinos or whatever. There's nothing there. They've picked all the jewels. And this one is basically virgin, hasn't been touched. To give you an example, the previous company that owned this, which we've auctioned it off of, over a 4-year period, they drilled about 9,600 meters of drilling. And they didn't do any scientific studies or anything else. Basically what they did was they said, look, here's the vein or veins. They're going across the surface. Let's drill them. There it is. Let's drill underneath it. And they did that. And long and behold, over a period of 4 years, they drilled 9,600 meters. And if you, and they ended up resulting in about 4.2 million ounces of silver being defined. So if you do the math and you say, okay, 9,600 meters costs X number of dollars a meter to drill, and then how many ounces did I get for it? Well, you know what? It costs you about $4.20 an ounce to discover that, to outline those ounces. And silver right now is trading in the $24 range. So I would say that's pretty good return on your exploration costs per ounce of silver. So if this thing is that cost effective of finding silver, I mean, imagine if you use new tools on it, all these great tools that we've discovered over the years and years and years. And, you apply modern techniques so that, hey, you're going to have success. There's absolutely no doubt about it. But I think personally, not only are we going to have success, I think we're going to make brand new virgin discoveries.
Okay. Potential, let's call it. How many ounces do you think are there that you're going to pull out of the ground?
Ooh, that's a loaded question, to tell you the truth. I can tell you where deposits get interesting for larger companies or ourselves or economics is probably starts about the 50 million ounce silver mark. And that's a great one. And you would start doing the economics of putting it in. But if for some reason, if you can get over 100 million ounces, man, you've got something. And I'll tell you, if God be willing, if we go over 100 million ounces, I'd say some of the big boy neighbors we have we won't be around anymore.
Okay, so do you think that's the potential, 100 million plus ounce deposit?
Let's start small and work big.
Okay.
And you got to remember, this is our first round. But could I possibly see 50 million ounces? Absolutely.
Yeah. 50 million ounce potential in this project.
Yeah, at this point in time, with what we know. Yeah.
Okay. Peter, so what's, it's funny, before we started the interview, we were kind of kidding around, and I said, hey, what is this sculpture that you have behind you? I mean, it was actually behind you, and I said, hey, move it to the front because it's kind of interesting. So tell our audience, what is that exactly? What is that? What is this guy? Is that a soldier? What's going on? Is that guy with a machine gun?
Yeah. Yeah, no, that's actually a jackleg, an underground miner. And this was given to me, Jack, by the governor of the state of Sinaloa and the Canadian ambassador of Canada in our inaugural mine mill opening from a mine I put in production with Scorpio Mining Corporation in Coastal Sinaloa. And I originally started as a private company in 1998. We went public in the year 2000. Terrible time. I think between 4 houses, we were able to raise $2 million. And that was a big raise at that time. And I put in $750,000 of my own, and we went at it. And in May of 2008, we had a mine and mill and inauguration, and now that one mine has turned into 4 mines, and now we were taken out during the process by a larger company, which is today known as America's Gold and Silver, and I sat on the board till last year, and then I stepped off the board after 20 some years.
How did the stock do? I think that's what our audience wants to know. Forget about the
yeah, well, when trying to raise the original seed capital, and when it all started, it was about 20 cents. And when we got taken out, it was approximately $4.60. So
okay, okay, it's not bad. It's like 24x, 20 plus X.
Yeah.
Okay, so let's talk about your background, Peter. Like what I mean, you've been doing this for a while, like, you said 35 years. So like you were a child prodigy. You started when you were like 5 years old, like Mozart. Tell us about your background, like, and especially in this region, because I think it's important.
Okay, background, I'm a graduate engineer. And then also on top of that, I'm a geologist. So I'm kind of a hybrid. Usually you don't see the two together, and that has allowed me to do a lot of stuff. So originally I started, as I mentioned earlier, about the Val-d'Or camp. I started there with some of the big companies like Placer Dome and a few others, but eventually that led me to Mexico, and I was in Mexico pre-NAFTA, pre the new mining law they have now, and at that time there's a handful of us, kind of expats wandering around Mexico. Some people would recognize him. Ross Beatty, who's a billionaire, was there, and he was banging on rocks. And the Hunter and Dickinson brothers, the two Bobs we used to call them, they were there, and then you just had Mexican companies. But anyways, from banging on a lot of rocks and looking at a lot of things in Mexico and knowing a lot of people over a lot of period of time, it's given you a great background to the point where you can look at stuff and you can say, this is real and this is not real. And we're all getting a little gray in the tooth or long in the tooth, Jack, and I have no intentions of wasting my time on something that's not real, or wasting my investors' money on something that's not real. So I wouldn't be working on the Santa Maria property if I didn't think that this has very large potential.
Okay, so 50 million ounces we talked about. Let's jump into some audience questions. Okay, so Dale is asking, how many drill targets have you set out? How many meters is in your upcoming drill program? And when do you start drilling? He gets right to the point.
Yeah, no, well said. I would refer you to a news release, which is coming out Monday. And it's funny you asked me that, and it will answer that question. But it's not in the public domain. I can't answer that. But what I can say is, and this is in the public domain, is the previous drilling, the 9,600 meters that were done, was down to a depth of approximately 125 meters below surface over a length of 600 meters. Okay. What we did is going back to basics and looking at this property from another way around, is using modern geophysical techniques. We did what they call an IP survey, and IP stands for instantaneous potential. And what they do is they have a receiver and a transmitter over a certain length, and they send down a charge underground that looks at resistivity and conductivity and all these other great things. But the thing about it is it penetrates down to minus 500 meters. So now I'm looking with my 3D glasses below minus 500 meters. And so that program has been ongoing the last month and a bit on the property. And that, I think, is going to be the basis of what we know now, and the basis of what we find out from that is going to allow our success to grow this thing in a hurry. So I would say to anyone, Monday, look for a news release. We'll answer a lot of Dale's questions.
Okay, so Dale is happy that you're not answering my loaded questions about when the stock is going to $5, anything like that. So that's good. I guess, Peter, important question. Do you have enough capital, for your exploration program? Like, what's the program like, and is there enough capital in place?
Well, we just did a raise not long ago of $4.6 million. That was announced at 10 o'clock one morning, and at 10:15, the book was at $9.8 million, and we closed it at 4.6. We just thought it was too dilutive to the company at the time, given the share price that we were doing it at. So we're well cashed, and that funding was probably about 50% institutional and 50% retail. Okay,
so this is so that's interesting. Okay, so basically, there is some people buying the private placement. So, this I guess the takeaway is, the smart money has confidence in you and the project.
Well, again,
if there's that kind of demand for the shares, I mean, that's my takeaway basically.
Well, I think what it goes on to, Jack, is the question you asked me earlier. Is that do you have a track record? So what ended up happening after Scorpion Mining got taken out, and that was my first kind of, other than working for majors, my first forte into my own companies and building my own mines. I created another company called Scorpio Gold, which ended up being a heap leach open pit gold producer in Nevada, and it's still there. And then I created another company called Neo Gold, which we outlined 2 million ounces in the Val-d'Or camp, and was bought out by a Cisco, which is a $1.2 billion market cap company. So this is my fourth kick at the can. So I know what it takes, and financiers or financial institutes and mining sector know me quite well over the years.
Okay. Peter, what's in terms of the pipeline for news flow, what can investors look forward to over the coming months. And I think, also it's important, in the exploration space, this is not a, this is not like you're going to have instant, you're not going to have like instant results where the stock is going to,
No.
go to $1 tomorrow, right? This is a long-term play where this is going to take, I don't know, months basically to play out.
Yeah. Well, as a catalyst will be of course, the results of this IP survey, geophysical survey. And then based off of that will be an aggressive drill program on top of that. And that drill program, I'm guesstimating, will probably take a period of 6 months. So there'll be a constant news flow coming out over 6 months. Now, the interesting thing about this drill program...
And that starts when? When does that start, the drill program?
Stay tuned for the press release on Monday.
You're very dramatic, Peter. You're doing all the right things. So there's going to be a program to be announced. We got to stay tuned. And I got a question here. Going for gold, silver, or both?
That's a great question, and this I can talk about. And one of the reasons why I'm interested in this is, the original resource in this Santa Maria, the two Santa Maria veins, I'll just call them the veins, the Santa Maria veins, they contain only silver and gold. And I'll give you an example. One drill hole put into the deposit, SM18-03, and if you go to our website, you can see a presentation, and it'll show you that all. That one was drilled, and it returned 9.8 meters of approximately 1.1 kilos per ton silver, plus almost 4 grams of gold. You got to love that. And that goes back, like I was saying, grade is king.
Okay. We have Leszek, I think. Leszek is asking, what new technology is Peter using to find gold, silver, what have you? What are the new technologies right now that are going to basically get you what people couldn't find before? Well,
I guess it's old technologies that have been refined because of technology growing and everything else. Give you an example. So we did an IP survey, and we're looking down minus 500 meters below surface. Well, when I started with Scorpio Mining, looking at that in Sinaloa, the mine, after the mine got into production and I was looking for the next deposit that was going into production, I did what they called a VTEM survey. And a VTEM survey, this actually looks 1.2 kilometers below the ground. So, you can imagine, you're sort of like Superman with X-ray vision, and you can look, 1.2 kilometers under the ground saying, I wonder if there's anything there or not. Or you could see it all the way from surface down to 1.2. So those are amazing tools. And then on top of that, and everybody sees it because their kids got the iPad and they're playing with their games and this and that, is that, they come up with all these new programs that you can take this data that you build and you plunk it in there, and you massage it, and you end up with 3-dimensional views of what shapes look like underground and this and that. And I believe that at one point in time, Mark, I sent you a little video of the deposit flying from surface, going underground, and flying around it and everything else. And that's at our website too, if you'd like to see that. And that's really cool. I mean, it would be actually something your kid would like to play with.
I think we should actually, we should put up, so the website is Fabled Silver Gold, and people can actually go to the site. They can see the presentation, all the updated stuff, which I think they should. We're going to show the full deck next time, but I think if anybody wants to kind of get a head start, jump on the market, go to Fabled Silver Gold, and you'll get that. But I guess right away we get a question. Fully diluted, what's the number of shares at? What's the insider ownership?
Fully diluted is about 120 million shares. 27 million of that is owned by insiders. And then the remaining is 20% institutional and 20% retail.
So roughly 10 million US market cap based on today's price.
More or less.
Okay, good risk reward. Andreas is asking, are you using Lidar to find mineral deposits?
I have used it before, but in this, and Lidar is basically kind of like a side scan sonar looking underground. It may be a tool down the road that we consider, but I think the IP and total field magnetics, what we can do with that for the first pass, and this is the first pass that we're doing. I mean, this is not the end of it. I think this one, what I expect we're going to end up doing, Jack, is we'll be not only extending the known vein structures, and that's great, and there's nothing wrong with that, and you can build a resource. But I'm looking for a discovery, or discoveries, and
okay. We're gonna have a bunch of questions about U.S. trading. Are you? When is the stock? Is the stock on the OTC? It's not on the OTC now, right?
No, it isn't. But actually, we're working on that right now. So we're going through the process. I was told that it's in total from start to beginning, it's anywhere between a 4 and 6 week project, and we're probably 3 weeks into it right now. So, we should be on the OTC, and we'll probably in 3 to 4 weeks at the most. And we certainly put in a news release telling our potential U.S. shareholders that. And also at the same time, we're probably within a week we'll be listing on the Frankfurt Stock Exchange in Germany.
Okay, so there's a couple of catalysts that are going to bring in more eyeballs on the stock then, because the U.S. market is getting more interested in gold. The Germans, the Europeans, historically, they're always liked resource, silver, gold, everything.
Yeah.
So that's very positive. Okay. Let's see. So let's kind of wrap up. We're going to have you back maybe next week. You'll run through the full deck. We'll get the updated news. We'll talk about the news and everything else. Peter, if you had to kind of recap, top 3 reasons why, in your opinion, top 3 reasons why investors should, consider Fabled Silver Gold today.
Getting in at the ground floor. So we're just beginning. This is a brand new company just taking off. So you're getting at the ground floor, number one. We're well cashed up. Management has a track record. We know what we're doing. We know where everything is in Mexico. If I need a drill, I know where to get it, or this or that or whatever else. Location. We have our office in Parral. Property's right next to it. Half an hour from the office, we're on our property working. But as you'll see in the news release coming Monday, there'll be a constant news flow coming from the field with various things, probably over the next 6 months minimum, if not more.
Okay. Peter, on that note, I want to thank you, and we look forward to having you back next week for the next live stream. We'll get the show them the slides, show them some maps, and we'll take it from there.
Yeah, and I'll drag out another award I got. We can show off.
How many of them do you have? Because we can have a new one every time.
I have about 5 of them.
Okay, excellent.
These are broadcasts, original one-off broadcasts.
Oh wow.
Yep.
Okay, excellent. So now you have an incentive to add a sixth one.
I think this time we'll make it silver.
The the sculpture will be out of pure silver.
I think that'd be the appropriate there, Jack.
I agree. I think our audience would agree also. So Peter, on that note, I'll see you next week. Thank you.
Thank you, and God bless.
Thank you. Bye. Okay, wow, it's pretty exciting there. All right, so let's get ready for our next presenter. And as you know, of course, we're only interested in stocks that have 10x upside or more. 10 baggers only. So let me just get things set up. We're going to bring on VSBY. Okay. Let's see here. Okay, we get the visibility group. Okay. Comments. Okay. There he is.
Is it bright enough for you, Jack?
Yeah. So you're in an undisclosed location right now. You're traveling?
Yes, deep underground. Correct. Yes, traveling at the moment.
Perfect. I'm getting a little feedback. Do you have, is there like a YouTube or something open maybe on your computer?
I don't. I'll close off everything else just to avoid.
Okay. I'm getting a.
How about now?
A little bit. You know what we'll do? I'll try to talk less. You do all the talking because I'm hearing feedback. So yeah.
Okay.
Hang on a second. Let me just put this up here. Oh, hang on, Jade. I need to fix this thing over here. Okay, everything's set. All right, and visibility group. Okay, things are looking good. Let me just get my notes here. A lot of big news you've had the last few weeks.
It's been a busy time, and more to come. Yeah.
Okay. Are you in Latin America now?
No, I'm not. Yeah. As a Canadian, my travel is enormously restricted at the moment. So my customers have to come to see me, which is actually really? what I'm doing at the moment. So
okay. No, because I mean, like right now, you're getting a lot of traction. That's things.
Yeah, we're getting good momentum, good validation, frankly, after a significant incubation time, if you could say.
Yeah, well, great things take a while to, the gestation period. It's like, a human baby takes 9 months. I think an elephant takes also 10 months.
Yeah. Maybe? I don't know. I've never been involved in that, but yes.
You've never given birth to an elephant. Okay. All right. So let's get ready to. I was going to say let's get ready to rumble. I think somebody has a trademark on that. So.
Yeah. No. Yeah. It's all good.
Welcome, everybody, to Wall Street Reporter's Investors Discovery Day, Company Spotlight. We are speaking with VSBY, Visibility Group CEO Jay Hutton. Company has been on a tear, and today we're going to find out more. And remember, it's your questions that make these events special. So I'm hoping to get a lot of great questions here today, so that we could all kind of do our, research and due diligence, like crowdsourced research and due diligence
right.
On the stock. I mean, this is already up almost, 400% from 15 cents? I mean, I don't know. I can't even, whatever.
Something like that, yeah.
In the last 2 months. So I don't know, what's the difference? 400, 500%. I mean, if a stock is going to 2,000%, what difference does 100% make, right? So...
We still have a bit to get to the Wall Street Reporter 10 bagger, but I expect we'll get there. Yes.
You're making progress. So you got to stay humble here, because
of course
it only starts at 1,000%. When you get to 10x, that's when you're considered a potential super stock.
Stay hungry, stay humble, stay hungry. Yes.
We need 100x, Jay. We need 100x.
100x now. Okay.
Yeah, we need 100x in 21.
Okay. Excellent.
Yeah, I mean, people, everybody's, their expectations grow higher. So,
yes.
Okay, so let's kind of dive into the latest news. You had this deal that you announced with Imbera, right? That's
yes.
Am I pronouncing correct? Okay.
Yes.
What is this all about? Because the market is excited. What's going on?
Yeah. One of the challenges of the marketplace that we sit in is it's everything requires explanation for context, which I appreciate that's my job. And, I'm actually decently equipped to do that. But everything we do requires contextualizing and explanation. So in this particular case, I love to talk about this particular news release because it's a harken back. It's a sort of it's a testament to our past. When we started as an organization, among the principal developments we did was around digital glass, which is essentially taking transparent glass and turn it into a panel, turn it into an LCD panel, almost like your television would be.
Okay.
And so the first place we applied that technology with a series of partners was digital display on cooler doors and freezer doors. We did developments with Tyson Foods, Sargento Cheese, just a list of obvious characters that have as their product, they have product that's either frozen or cooler. And think of all the beverage companies that we could all list off a dozen of that you know, their product is displayed in a cooler. So one of the uniquenesses of the transparent glass phenomenon was that you could actually display on the glass while also being able to see through the glass, those two characteristics at once. So it makes product people really excited because they spend millions of dollars on product packaging, and you can also do display on the display. So you achieve both of those objectives at once. And we always knew, and this is what's interesting, we always knew that this was a destination place for many retailers. People.
So Jay, so for context, basically for you know, essentially, I'm walking by a freezer, right? It's an ice cream freezer, and all of a sudden, I see a sign. It lights up. It says, you know, Ben & Jerry's on sale, whatever, $4.99, whatever the number is, and you know,
Yeah,
flavor
sure.
of the month. We got whatever, you know, we got. So you can do all these things, and
Yeah.
technology, most importantly, which we're going to talk about, is the key is the AI, the camera. So if somebody's walking by, they can kind of see, is this male, female, age,
Right.
and it can give them a customized offer almost.
Right, exactly right. And you haven't used the marketing terminology, but that's called consumer engagement and audience measurement. So those things together, let's say you're launching a carb-free ice cream and you're targeting it at 25-year-old females, diet conscious, whatever. That's exactly the type of application. And the reason why it's so appealing is it works. We measure the entire experience. We get 25 to 45% lift meaning you sell more product. And it benefits everybody. And the frozen foods aisle is the frozen wasteland of groceries. So if you can drive more traffic into the frozen foods aisle, everybody wins. And by the way, what's really interesting about the research, not only is the brand highlighted win 25 to 35% lift on the SKU, but the entire category lifts. This excites grocery. You drive more traffic into that aisle and the entire aisle lifts, which is really fascinating from a grocery point of view.
Okay, so more basically the technology creates more sales. It pays for itself.
Right. We always knew this technology was going to break through, and we invested in it back in 2015, and we had some initial wins with it. But those wins were proofs of concept, which are great, but they don't excite me. But the problem that the marketplace has now addressed, which makes today different than then, is the price point of the platform has come down by about 50%. Okay. And now that makes the entry much easier. You're looking at a beverage cooler, and this is the model that everyone needs to understand. A beverage cooler is transparent display. You think of all the items in that beverage cooler. That beverage cooler's media value in the USA is about $600 per month. The technology is about $4,000 capital equipment with, of course, licensing on top of that. So all you have to do is create that additional trajectory. You sell that product as a media model, $600 a month. Over 3, 4, 5 years, it's making money. And that's what the most recent changes have done to the marketplace. So the Imbera deal, just putting it in context, if I could put it in the Modelorama context as an example, because it's not coincidental, the Imbera deal came immediately on the heels of the Modelorama deal. If you look at the most valuable real estate, the largest single canvas in a convenience store is the cooler bay. 55-inch screens within that cooler bay, 3 or 4 brands all paying $150, $200 a month. That's exactly what we're talking about, right? So brands will pay for that placement because it is very influential and it's at the point of sale.
Okay, so it's very interesting. So we should be showing video or photos. Next time we're going to have photos or video.
We can do video. Yeah.
Bottom line is, I'm passing by the frozen food aisle, which is huge glass frontage. All these things is all glass. Or even in a convenience store, the Coke, whatever, it's got a big glass thing in front of it so you can see what's inside. So essentially, that becomes, with your technology, a display, a digital display.
Yes.
And it'll show
for the high velocity products. That's the important thing. These are already the high velocity products. To beef them up with motivated brands is exactly the litmus test here.
Okay. So it's very interesting. So basically, this is, everybody goes, they're, at a 7-Eleven, they see they jump out, I don't know, they're buying water, or whatever it is, they're buying water, or they're buying a Coke, and now it could, run an ad for them to, I don't know, here, buy a Snickers bar, whatever it is, right? Chips, a 6-pack of beer, whatever you want, it's going to have, all those things going. So exactly. So how does this deal work with Imbera? What are you doing with them? And most importantly, what's the economic potential?
Yeah, so let me run through both of those, because that's where it gets compelling. So Imbera is the world leader in standalone commercial cooler for grocery and C-store, right? They own the marketplace, more than $1 billion in revenue last year, and they have something like 70% market share. So if you're looking for places to do business with standalone coolers, these are the best guys in the world to do it with. They're Mexico-based, coincidentally. We have enormous exposure in Mexico. And the economic model is, for example, a Modelorama with 9,000 stores may wish to choose their top tier stores and deploy digital coolers in those stores. So the application of that would be obvious. It's a media application, as we've been talking about. It has a capital equipment cost. Let's say you're doing 2,000 stores, an average of $5,000 per each of these coolers. That's a $10 million original CapEx. Visibility is, we're not yet sure if we want to participate in the hardware model or not. We've left room margin-wise to do that. I'm generally allergic to hardware because it blends my margins down. But if we can do a very big deal and make 35% gross margin, we might wish to do that. And we'll just segment, when we report the revenue, we'll segment our SaaS revenue outside of our hardware revenue, so that the purity of the SaaS doesn't get infected with the lower margin of the hardware. And so that's the CapEx value. And then the overall licensing value of a 2,000 store deployment is $1 million a year. So this is transcendent in terms of its impact. And that's just one retailer.
That only includes 2,000 stores.
2,000 stores, a conservative estimate, right?
Yeah. How many stores are there in, potential? This could go any convenience, any bodega, any 7-Eleven, whatever.
Well, just restricting the comments to Latin America, 50,000 stores were announced in the ABI deal. And actually, we know there's more. But if you just assume that marketplace is the marketplace we're going to address and no other, it's a $120 million market just in the capital equipment. And then on top of that, probably $7 or $8 million a year in licensing. Not to mention the value of the media, which, as you know, Jack, that's a second revenue stream for us. If we can successfully bring the brands with whom we've cultivated multi-year relationships into buying presence on the cooler, and they're all desperate to do it. The economics are excellent. They want to buy media, not equipment, right? So if the equipment is deployed on behalf of the retailer or in some economic model that makes sense to everybody, and then we can sell the media. We sell it as media, not equipment, not routers, not software. We don't sell any of that because they don't think that way. They want to buy media. Okay, buy media, $200 a month, 1,000 store minimum, and that's your economic model. And by the way, Modelorama has had this crystallizing effect. We all know that the store is becoming a media channel. We've seen some indications. Walgreens this week announced the fact that they're building an internal agency just to do store as media. And we've been telling this story for 4 or 5 years.
Monetize all that.
Right. Recognizing that the real estate, especially the digital real estate, if you'll allow me to use that term, has significant value. If you believe that premise, then you look to VSBLTY as now having landed the largest digital network in retail in the Northern Hemisphere. So if you believe store as media, and by the way, you only need to look to evidence with what Walgreens and Walmart are doing, building internal agencies to monetize the store, that's exactly what we're doing.
Okay, so it's very interesting because you've been talking about the store as media. We were talking about the store as media for a while, and I think kind of what's coming to sort of what's crystallizing is essentially, okay, so when these large retail chains, they realize, okay, we got to monetize everybody that walks into the store, whether they buy anything, they can still be sold ads, media, because they're passing by the aisle, whatever, all these brands, they want to influence these people. So not only are they going to make money on selling the products, they're going to make money on ads. And your technology basically is the thing that
critical
makes it happen.
Critical. We're rich. Not just
everything else.
Yeah, not just the cooler technology. It's important to understand that the cooler is only one lane. You know, right. I could point, I'm not going to name names, but I could point to, in this category, a company that's developed a competing solution, which is not transparent, does not include next generation computer vision, was just valued at $180 million in terms of their valuation. And that's just one piece of what we do. So it's really interesting to me that we've got this
100. You have a comp. It's 180 million value and
private company.
What's the name of the company, just for context?
Cooler Screens. Microsoft is an investor of theirs, but you know the what they've done more than anything, and I give them credit, and they've done a wonderful job. But what they've focused on is this one specific component of store as media. We are 10 different components of store as media.
So they're just doing, they're just doing the cooler displays.
Just the cooler.
Theirs is not transparent. Yours is.
It is not.
What's the point of not having transparency? Because I want to see the display and I want to see what's in there, so it makes me want to buy it.
I'm not being critical of what they've done because I'm actually very respectful of what they've done. But from a technology point of view, it's a non-starter. Can you imagine going to a brand meeting and the person that designs the packaging, and they spent $30 million on packaging, is then told, we're going to do a campaign, and part of that campaign is obfuscating your product.
Yeah. No,
like, I'm sorry?
Yeah. But wait, okay, so they're valued at 180 million, private company.
Roundabout. It's difficult, as you know, Jack, to infer exact value in private, but it's around that number, yeah.
Okay, so that's a VC valuation. The market cap right now of VSBY, number of shares, how many shares outstanding right now?
134, market value around 70.
Okay, so you're basically 70 million market cap Canadian, right? And this is, and you have essentially not just coolers, you got the whole store, and you get a tech. So essentially, it's turnkey solution, everything.
I'm not doing the comparison, but we have what I think is superior tech, and we have a 50,000 store network. We have two things that should be reflected in our value. And I appreciate that. You know, you kind of have to get that story underway before you get that full reflection of value. I completely understand that. But it's really satisfying to me that in the category, in a subset of our category, the valuations are that crazy. It seems to me
that validates
sure.
that you know, people, you know, the smart money is understands the space. If you have VCs, they've done the research, right? These guys are not stupid.
It validates the tech. But equally importantly, it validates the category, that category being store as media. Enormous validation for that. And if you believe that, then you want to go to the place where the biggest networks are being built. And that's us for now.
Okay, so we're going to do more on this. Okay, so let's jump into some audience questions here. Okay. Let's get ready to rumble. Dale, okay, we got, let's see.
Shouldn't there be a trademark sign there?
I think there is, yeah, I don't want to get sued. We got, hang on, we got a super chat donation. Jay, thank you. We got a $4.99. So this guy must be making money with the stock. That's what this means. From marketing.
Good.
All right, Skippy62 Abel. All right, let's see here. Okay, so we got some traction. Okay, so let's see. We got a question here. Dale is asking, Jay, congrats on the recent deals you announced. This store as a media theme you reference seems like a game changer with the multi-billion-dollar channel partners you announced. He continues. Is there potential to adapt the same strategy with some of the other large channels you have announced over the last year? Give us some context.
Absolutely. One of the things I say to my management team all the time, and they roll their eyes at me when I say it, is let's play chess, not checkers. So everything we're doing is very strategic. We spend a lot of time putting it together. And if you look at the channels we've announced in the past 12 months and the channels that we are about to announce going forward, you're going to find that every one of those channels is specifically and deliberately designed to optimize store as media. Just take Sensormatic as a quick example. Let's talk about who Sensormatic is. Sensormatic is the largest retail technology company in the world. They have 185,000 customers in 104 countries. 185,000 customers. That's not locations. That's 185,000 customers. Walmart would be a customer in that analogy. So they recognize the store as a principal data repository. Jack, you and I have spoken about this. They recognize that. So anything that generates data in the store, we generate data around customer journey and path to purchase and customer engagement. Anything that creates that value is monetizable independent of the store itself. Sensormatic, as an example, gets that. So you're going to see us rolling them into a lot of our deployments because strategically, even though we could go it alone, getting Sensormatic into this headspace of understanding how our piece plays a role in data store as media is a game changer for them, because we give them those skills. They then walk us to all of their biggest customers and we blow up overnight. That's the strategy. If I got to break it down. And we have other strategic partners, which will be announced soon, all of whom represent revenue in multiple billions of dollars. And it's exactly the same idea and concept. And the other thing I want to make quickly on Cooler, I made a point earlier that Embera is the world's #1 player in commercial standalone coolers. And you might reasonably say, well, I go to Costco or I go to BJ's and I see these mammoth coolers that are multiple doors, but they're one big cooler. Wouldn't it be smart to have a relationship with the #1 player in that category? Stay tuned.
Stay tuned. Jack is asking, how quickly do you anticipate rolling out the deployments with the recent Anheuser-Busch deal you announced?
So two things. One, we are deployed now, modestly deployed. We're doing a lot of testing and the sort of thing that you do at pre-roll. We're in 4 countries, Peru, Colombia, Ecuador, and Mexico. And in the first quarter, we're still evolving our objectives. Have working groups 3 times a week with ABI, working on the definitive contract and working on deployment schedule simultaneously, which seems a little bit bipolar to me because we're doing 2 things at once. But the objective in Q1 is 2,000 locations, and we're moving to a point where our cadence of deployments, and this is crazy to me, we'll figure it out. Thankfully, this is not exactly my objective, or at least my responsibility. We're going to a point where it's going to be 35 stores per day deployed. So it's a very aggressive ramp.
Okay. So we got Jay, look at this. We're monetizing the video also. We're not just, this is just like you're doing.
I've never seen that before. Yeah.
We have people, it's a new technology. We're just trying. Because, as a marketing guy, it's curious if people are, I don't know, they make, I don't know, like a tip or don't. It's like, I feel like I'm a street musician. We're getting like people
like a busker.
that song, the Dance Monkey song, right? Like that. So we got 2. I don't know if this guy's talking about the stocks or us. 2 absolute beauties.
It can't be us, Jack. No offense.
Two. Okay, so Sam is asking, what is the revenue potential between the Modelo opportunity versus the Embera opportunity, or maybe both? What's the
Yeah, I don't actually view them to be in contrast to one another. I see them very complementary, and I tried to point that out earlier. But if you just take Groupe Modelo, 7-year deployment. Again, we're still revolving and perfecting our business strategy and business deployment and rollout. But roughly speaking, I have 2 lines of revenue with Modelorama. I have the media line because we're involved in the media penetration. We're involved in the joint venture, and the joint venture generates money from the media. But just that media line is over 7 years between $200 and $350 million US dollars. That's the media side. And on the licensing side, this is over 7 years, is around $70 or $80 million. So that's just that one deal. Of course, there's other deals like that. Not many that are bigger than that at the moment that we're pursuing, because it's very, very large. But that's the kind of role we're going to play as we deploy these large digital networks. Now, Embera has a CapEx opportunity for us, should we wish to participate in that. And as I said, I've exposed my allergy to hardware in the past, and I think everyone understands that we want to be a SaaS pure play, but Modelorama will be an obvious candidate to consume a few thousand screens, a few thousand cooler screens. Other places in the US that we're pursuing right now that we'll announce soon will also consume them. So Embera is a wonderful candidate to be a complement to our store as media. It's just one of the canvases, if you know what I mean by that.
Okay. Okay, we got a great question here. Shafin is asking, how easy would it be to replicate your business, your technology, and model by others? I guess he's asking, how big is your moat? Do you have a moat?
Sure, we have the uniqueness of our model. Again, allow me to speak of Modelorama because it does allow me to identify components of the marketing strategy and technology strategy that are different. At Modelorama, there's 3 specific SaaS modules consumed. There's digital display. Now that digital display SaaS can either power a generic display, 36-inch display, or it could power a cooler door, as an example. That's one module. The second module is the anonymous video analytics, where we actually take the computer vision, we roll it around the AI inference models, and we yield a result. The third one is security. Nobody in our business does all 3 of those combined. You'll see siloed companies that do content management solutions, which is module 1. You'll see 3 or 4 competitors that we compete with on the computer vision, anonymous video analytics, and 3 or 4 different ones who compete with us on the security side, but no one that rolls it all together. So my response would be, from a single vendor, a pretty good moat. Can other vendors combine together to develop our solution under a single cover? Yeah, perhaps that's the most concerning risk. But we're continuing to move our technology forward. We're adding capabilities to it right now, and I think we'll keep our lead. In technology, speed trumps everything.
Another question here. Leszek asking, what does Jay see as his greatest obstacle for VSBY's ultimate success? Said differently, what is VSBY's weakest link, and how is Jay positioning to deal with it? Good question.
It is. Doesn't it remind you of the interview question? What do people say is your weakest characteristic? And I'm always told the best way to answer that is, I'm such a high performance guy that I really demand a lot from people, and that's really weakness. But what I'm going to say is, and we've been aware of this from the very beginning, and I wouldn't express it so much of a weakness as more of a strategic area where we've left room for others. We're an indirect selling model. We sell to systems integrators who package our product with hardware and other pieces and sell to the end user.
Like Sensormatic.
Like Sensormatic. So we spend little time developing protocols and capabilities on installation, what we call in our business day 2 management, networking, and monitoring. And so we've purposely relinquished that area because our system integrators sell it and they make margin on it. So were we to develop that capability, we would actually run into conflict with our systems integrators. And so in places where we're looking at deployment cadence, we rely upon others to ensure that they're ready to roll as quickly as we're ready. And it manifests as we go at their speed, not at our speed. And it's frustrating. But the win is we end up not having to build capacities, which is a place where you can spend a lot of money. We don't have to build that capacity because that capacity is given to us by our channel partners. And so that means that we have to be really diligent about partner selection, which is really the punchline. And I think we've been pretty good so far. And as I said, there's more partners about to be announced, and everyone will be really impressed that they're really good at those things.
Andreas asking, when will we be able, people see this freezer deal in action?
Well, we've already deployed. Well, in the USA, within the calendar year, and maybe within the first half of the calendar year. We have one deal in flight at the moment on the East Coast with a large multi-location retailer that will incorporate that freezer technology. So, and this is why the strategy of Embera and others is so critically important. They need to be side by side with us because it's an integrated sale. right? It's our product built within their product. So it's a combination effort.
Okay. Let's see here. I guess Jeremy's asking. I think he's asking, when will we get more news on the security, the applications, the security applications of the business? What's happening there?
I think we'll see some news within the next 7 to 10 days in the security side, and strategic, product, and partnership.
Okay. Okay. Let's see here. Any more questions? Oh, here we go. Here we go. Give us the first letter. You want the hint of the partner that's coming.
Yeah, that's not going to happen.
So
I can't do that.
Okay, so Jay, let's okay. So we covered basically this deal with Embarrass. So I think people have an understanding of kind of the upside here. We got some pretty impressive numbers, and okay, we got let's do 2 last questions, and we'll let you get back to okay. So we'll be okay. Oh, here we go. Will it be hard to get approval from wherever you deploy due to privacy concerns? We've talked about this, right? I mean, the areas they love what you do.
They do. It doesn't mean I don't have to navigate lawyers. I honestly do, and it's the bane of my existence. Actually, we just spent some time, and I should tell the shareholders we successfully navigated this particular problem. It is with the largest beverage company in the world, in the non-alcoholic beverage area, and we're planning to do something with them in the new year. And what they're mostly concerned about is, as you can imagine, what they're mostly concerned about is, what are the things that we could do with you that could be negatively affecting our brand? So if we're deployed at X location and it's discovered that we're doing anonymous analytics or we're doing something we shouldn't do, then it's going to be damaging to the brand, so we're not going to do it. So you, visibility, must convince us that everything you're doing is within the law in every state we're deployed, and usually we navigate that pretty successfully because thankfully the architecture of our product exposes nothing identity extractable. So I couldn't pick up your image in retail, Jack, and somehow connect that or reverse engineer that to your identity. And once that's explained, and always it needs a manual explanation. Once that's explained, then we get green lights, and we just got green lights from this group. So that's just an indication.
Question here. I guess the question is, does VSBY need to raise cash, and I guess what he really wants to know, will there be any dilution in the future?
So one of the favorite things CEO likes to say is that no, we have no need to raise cash at the moment. We feel we have what we need to get to the EBITDA positive point, actually, which we're projecting in the mid part of next year. So because of that, and really, I'm excited to say that because the last round we did was quite dilutive. I participated myself in it as a way to stave off that dilution. But no, we're not intending to do any raises anytime soon.
Bill is asking, so Intel development still expected by end of year, like previously mentioned.
We have a very important product initiative that we hope to get out in the marketplace soon, and it's already in production. So some of that supports my argument to get it out quickly. I am the David and Goliath story. So I generally don't control all the levers, but it is my expectation that we will, yes.
So he wants to know, what is it?
He wants to know the last letter of the, yeah, I can't.
If it's either Pepsi or Coke, cough over your right shoulder. Is there any institutional? I don't think there's any real institutional ownership yet.
There's a couple, yeah. Yeah, we have a couple of Toronto-based funds that are in the stock. In fact, I spoke to one of the principals this morning.
Yeah. Okay. Let's see here. I think we are. Yeah, I think. Okay. Let's kind of wrap up, Jay. What else can we expect? We're next couple of weeks before we close out 2020.
We got a couple of things that we expect to get out before we all eat turkey for Christmas, and keeping appropriate physical distance. And and I think that those will be important strategically and will be appreciated strategically in terms of their context and importance to the company.
Okay. Last question. You've answered this. This is our favorite. At this moment in time, in your opinion, top 3 reasons for investors to want to own VSBY.
Well, we're a company that was founded in 2015. We spent, a lot of our own money creating this marketplace, validating this marketplace, asserting and putting the assertion of value to the test. And I think we've come out to the other end, on the other side of that, and we're now in absolute inflection mode, trajectory. Our revenues are up significantly, even in this current year, and next year they'll be up meteorically, just based upon the stuff that's visible to you at the moment. That's number 1. Number 2, our partners are enormous. And it's been a focus of mine. And honestly, it's required me to solicit patience from our shareholders, because landing those big partners takes time. And for those big partners to turn on the spigot takes time as well. But I still believe and maintain it's the most intelligent thing we can do, because the moment they're up to speed, and it's just beginning to happen now, then you basically take your hands off the wheel. And that's the intelligence of that. That's the second thing. And the third thing is the markets we serve. The actual markets we serve are exploding. We got the good fortune of the big boys, Walmart and Walgreens, beginning to talk about store as media. That to me is not negative. It's very good fortune, because that's exactly what we're doing.
Yeah, I think that's the next big theme. The next big theme that in the market, store as media. I think once people kind of see, once it starts to gain traction, because it's not on the radar yet. It's definitely not mainstream yet.
It's not.
It's out there. It's gonna. But I think it's definitely, once this thing starts, once it surfaces, everybody is gonna do it, because they need that. They got to monetize those stores, that square footage. I mean, it's critical. So okay, Jay. On that note, I want to thank you, and we'll see you again soon. I want to thank everybody for joining us on today's live stream. All the great questions. And the super chat. We got to give this guy.
Yeah,
we have to give this guy credit here. In the last, we got to monetize. We got to monetize that screen time. Jay, hey, thank you. Let's follow up. Hopefully next week or 10 days.
Yeah, great. Thank you all.
Thanks everybody.
Jeff.